Is a rate cut a done deal? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. Happy Friday.
Hi, Maggie. It's great to see you. And I think we're going to probably talk about my hair color, right?
Yeah, I feel like we're all drifting in your direction because wow, these markets have been crazy. First of all, just for recap, if you're listening to this away from your screens, we finally got the long-awaited CPI. Even though the government is shut down, they managed to get that one out, and investors like what they saw. We saw stocks rally. But the real action this week felt like it was in metals, and we have been talking about it, and you have absolutely nailed this call, Dale. So I feel like we should start there and tell me what you saw this week.
Okay, well, this was the initial top, and we were here Friday, and I was talking about, I thought
Are we talking about silver now? We're doing silver?
Do you see it? We're talking silver.
I don't right now. There we go. There we go.
Okay, so we had the initial break, and people were giving me a hard time trying to top pick this thing, and I just was persistent, and I said eventually, this 50 level I said to you was really important because that was a breakout over two prior $50 highs. So it looked like a monthly breakout. I thought it would become a false breakout, which happened after this early rally on Monday. Okay, so we rallied here. The difference in relative strength was, look how weak the silver rally was. Actually had some sales out there at 52.40. Let's see. And gold actually made a new high by a pip. So that's why I stress to people that follow me how important it is to diagnose what the gold silver ratio is telling you. And down here, when we were bottoming, told me we were going to have a period of underperformance in silver. It is why silver was the preferred short. But they both look pretty ugly now. This measures to about 46, right around here, and this is going to be a big area. Then 44. I'm thinking before it's over, low 40s. So I don't know how long that'll take, but because of the rate cut coming, and silver came back from being about 90 lower. Gold was 70 lower and came back. This was early morning. So I think there's a shorting opportunity if we get some, especially into the Fed. On a Fed cut, I think there's going to be some things to fade. And if we're trading 42.40 in gold, I would short it because I think we're going to 35, maybe 33 before this correction runs its course.
Wow. This is the thing with commodities. And I feel like for those of you who are so experienced in it, you can have big moves. And I kind of feel like we're seeing a little bit of it, but you've got more people participating now who may not. So talk to me a little.
Look at the miners, Maggie. They wiped out 2 months worth of gains in a week.
Wow.
And that's why I was saying people to, hedge it.
Yeah, you were talking about the miners a little while ago as well.
I'd love to sell a rally, and if miners rally again too, but I'm going to be focused on selling, shorting gold and silver if I get to my levels next week.
So this is, I think, interesting, and jump in if you have any questions. I know a lot of you are kind of watching this trade as well. And J&J, good for you, sold a decent amount of his metals on Monday. So he's feeling pretty good about that. Congratulations. So when you see this kind of situation, a lot of people may be watching this, and we've talked about this. Do you have pent-up demand on the sidelines who are worried about buying it when it was hitting record after record? Do they step in and buy the dip? How do you think about that, especially when you're trying to put on a short?
Well, nothing goes straight up. The problem with silver is it became a parabolic move. Okay. And parabolas, once they're over, it's never a great look. And I think I pointed out to people that watch your show and watch us that silver, the 9-day moving average was propelling this whole parabola all the way up, except for this, which is another trade that was talked about here on the air. But once we broke the 9-day, the parabolic move, the parabola was broken. And so it's just a type of move. Plus, there were in silver non-confirmations, unlike gold. So, I keep stressing it. Even if you got direction wrong on this, if you learn, it's important to learn and progress and grow. And I think that now you can see the importance of following the gold-silver ratio if you're a precious metal trader. Because, for example, Monday, like I said, if I had chosen gold to be short, it may have stopped me out. But look how much more forgiving being short the weakness was compared to being short the strength, which actually, if you had stops over the high, you got taken out before the collapse. So pay attention to the gold-silver ratio going forward over the years. And I do think eventually the gold-silver ratio, this is just a bear market rally, may have some more left in it, but I think we could revert to the mean, which is really about 40 before it's over. So, they could cut this in half again over the next couple of years. Silver is going to return to what was normal in the 90s and 80s, and that was about a 40-1 gold-silver ratio.
Hi, everybody joining us live on Substack and YouTube. It's so great to see you. I think everyone's happy we're heading into the weekend. Someone's asking already, what's everyone drinking? I'm down with that. I'm down with that, J&J. And I will tell you, my brother is trying to sway me later with a spicy tequila gimlet, which I've never had, and I'm not sure I'm going to go for that, but he's adventurous, so we'll see. As you all know, I'm not in my usual spot. I'm back down in Tallahassee. I'm visiting some family. But
I think you need one.
Based on what you just witnessed behind the scenes, yes, I do.
I would take that prescription.
It's always hard when you're change locations and try to make all these things work. But here we are. So talk to me for gold. So you just mentioned silver, where you think gold-silver ratio is going. Is there a point, even if you're going to try to short gold, is there a support level that you're looking at, or if you think this is a decline and then it resumes its rise, where do you see, what level are you watching on the downside that would be critical?
This formation right here is about $600 from almost 44 to 4,000. So the first stop will be 38. But if it's 1.618 of this, you could take it down to 36, 3,500. I think is realistic over, the next few months.
We got a couple questions. Are you watching Bitcoin, Dale?
Yeah.
I know you watch everything, but a couple of questions around this. Mr. Blort, I love these names. We love you too. Thank you so much. Is Bitcoin in gold's coattails and due to go up again soon? October, he's asking.
It's digging its heels in, but when you compare it to, what people used to correlate it with, like the NASDAQ, if you're long Bitcoin instead of NASDAQ, you'd probably be disappointed. So I think for it to resolve itself back to the upside, you need closes over 114. I don't like this RSI reading on the crash that we had, and even the higher low that we put in. It's okay, but I'd like to see new lows in the RSI hold above 30. So I think we could have another retest of 100K. So that was my number for a while. I mean, it was close enough for government work, but just because the market does it once doesn't mean it can't retest it. So that's what I'm looking for in Bitcoin.
Awesome. So let's talk about stocks a little bit, because this has been interesting. I think frustrating for some people. This is an area where I think we hear so many divided opinions. What are you watching in the S&P, and what do you think about this week's action?
Well, I'm more focused on some individual stocks that I'm already short and looking to short a few more because it took this kind of move in the S&Ps, which is a new high. Can't. Last week I said I think we're headed back up to retest the highs. Well, we broke out today. And regarding this CPI report, they've had it for a while. It was a good report. That's why it was released. That's my view. And you and I go to the grocery store. We know that inflation's higher than that. But it opens the door for the Fed next week. If it had been a bad number, do you think it would have been released so that maybe Powell would have backed off on a cut? I don't think so. But anyway, we have the S&Ps making new highs, and people are, going to call it a breakout. But for the first time, at this last high, we had a divergence between these two peaks, between this one right here was confirmed, and then we diverged here, but the reading was over 80. Look at where it is now with us at new highs. This is a pretty glaring divergence. So, we could start off higher. I think it looks uglier now than it did back at this high, even though we're making new highs. So, and there's a couple of things I'm looking at that it took this kind of rally. I think I said last week I want to short NVIDIA around 188. And look, NVIDIA is not making new highs while the semis are. And I don't think you could say that NVIDIA still isn't best of breed. It's the one everyone owns. So with semiconductors making new highs, here's another leader that hasn't made a new high for a while, Broadcom. Okay, I don't think it's going to make a new high. I think there's a possibility that we're topping here in Broadcom. So you have some things under the surface that don't look great. And actually, this strength in the market is getting these issues to the levels. It took new highs to get these things to the levels I want to sell them at, especially NVIDIA. So I think you could sell it up here, 88, right in here, 890. You're wrong over the high of the move. And if we take out 176, then we're looking at 156. So I think that there's some undercurrents that aren't that healthy. You don't have the banks making new highs, they're recovering. But, the SOX, the divergence is, look at this on the daily. Okay. That's a 4 hour we're diverging on. And then you look at the daily and had a little gap up here. But look at how the RSI reading is only 61 when I was starting to buy SOXS, the triple bearish semiconductor. We were still confirming, we were over 70. Now we're at new highs. Momentum wise, it looks worse now than it did a few weeks ago. I'm not saying that today is the top, but I'm saying that we're not confirming these highs. That's not a positive in my book. So, it could be a perfect week. Who wants to be short? All the shorts are gone. They took their stops out. The Fed's going to ease. Everything's great. There's no reason not to be long, and that's what worries me.
Question about from Star the One. Dale, what's your view on AMD? Are you looking at that individual stock?
No, but I've been talking about Palantir. That's another one, the AI trade that also has not made new highs. I'm not saying it can't, but it hasn't. We haven't even taken out the highs from last week. I'll take a look at AMD for our loyal viewers. I think that's the one that, all those big deals happened, and everyone's investing in each other. Oh, okay. So this is what lit it up. Okay. Yeah, it looks like a blow off, and this is probably what's holding up the semiconductors right here.
Mm.
So I would rather short something like just Avco if I want to be short a semiconductor. Right? Look, any asset class that you're trading, whether it's semis, whether it's metals, whether it's oils, you always want to short the one that's showing inherent weakness. And you always want to be long the ones that are showing inherent strength. And this one's showing inherent strength. So you don't have to be a hero and sell the one that has the best momentum. And it's even starting to diverge here. Better to sell something like silver instead of gold this week, where even if you were early, it didn't take your stops out because it didn't come close to making new highs, where gold did. So it's trade selection. It's almost, metaphor would be American Idol. All right. I'm not gonna sing. Not till the end
Are
of the
you
show.
sure? I was gonna say.
And anyway, contestants have to make their biggest decision is what are they going to sing? It's their song choice.
Yes.
And if they pick something that really doesn't fit them and they can't own it, it affects their performance. In our business, it's trade selection is our song choice. So you could be bullish a dollar and be in the wrong currency. And even though the dollar's going up, you could be in something that's hardly participating with that move. So it's important, if you have to write it down, make a spreadsheet, whatever you trade, to rank relative strength of whatever you're trading. And you short the bottom half on rallies, and you buy the top half on dips.
Makes a lot of sense, but these things are always harder to do, I think, in practice than, it
Keep
takes
it simple. Be Forrest Gump. Keep it simple.
You just talked about, first of all, I just want to, you mentioned briefly financials haven't been doing well as one of the things you're kind of watching and worried about. You'll all remember, if you watch my conversation with Dean Christians on Monday, he was also talking about on his risk metrics, not liking what he's seeing in the financial sector. And that's one of the things that has him sort of paying closer attention. So these things matter, but I just wanted to underscore that for those of you who didn't get a chance to look at that interview. You mentioned something else that I think is important, Dale, and that's not being a hero and sort of, a lot of people will see the market hit another record high and be like, oh, you're wrong. Like if you think that you're worried about things, you think we're getting close to a top, it hit another record high, therefore you're wrong. If I'm hearing you're looking at the risk probabilities, and you may be early, but you have a framework, right? Where you, if I'm remembering, you probe. So yeah. You start to test out this theory. You don't go all in, and you're not trying to time the exact top. You're just trying to get ready, right?
Yeah. And I don't like to have a lot of company. And I would say that there's not a lot of company, especially after today. Now everyone's talking about another wave to the upside towards 7,000. We'll see. Mm-hmm. I just see a few chinks in the armor, and I think it's going to be across the board kind of a buy the rumor, sell the fact on the Fed cut this week.
So, it just reminded me, and I was thinking about this with CPI today. I just got done sitting down with Warren Pies a couple days ago for this month's For the Record. And he's another person that doesn't like company, and he's not afraid to push back on consensus, which is one of the things I love about both of you. And he's been thinking really hard about the inflation picture. I just want to run a little tiny clip from that conversation.
Oh, great.
I think that we're in the middle of a cyclical disinflationary period, which can absolutely happen in a secular debasement trade. And I think that bonds actually provide a lot of diversification to an equity portfolio.
So super interesting. He thinks we're in a disinflationary period, which is, you're not hearing a lot of, and I know that there's a big debate on this. By the way, that comes out, I believe we're putting that out on Substack on Tuesday for members of the Market House. So keep your eye out for that. But But you have to be early if you're going to get some of this stuff right. Not saying he is, but he makes a compelling case for what he's looking at and why he thinks consensus is wrong. I feel like you're in that camp with stocks, Dale. Everyone's kind of convinced this melt up is right.
Metals have already given the gold sign for what Warren just talked about. So we're going to go through a period, and that's going to take down all prices. Basically, the dollar will be good, the bonds will be good, and and everything else will be bad. Okay, so that's the kind of period he's talking about. Dollar, still a lot of dollar bears. It hasn't done anything right, anything wrong off this bottom from 96. So bonds are still acting okay. You look at the bonds, and now when I look at the bonds, I don't really see them the same way. This base that it's built has been really tremendous. I'm trying to get to my charts. Okay, so let's look at the bonds and what the disinflationary trade is. I think there's a pullback coming. We talked about the test of the breakout that it measured 93. We're almost at this target. But then if we break out over 93, then we're talking 103. And if you look at the weekly, what a long base it's coming out of. And here's that 100 mark. So the bonds do look like they're going to, squeeze the bears right now. They look good. You can't argue with them. And, they had, you had plenty of opportunity. This was the breakout. We talked about it here. And I said we were going to break out, and we can't ever close under 88.5. Look how many tests we had at 88.5. Here was one, here was one, here was one. I think this was that big debacle in the UK. And here we are about to challenge another major resistance level, which is a target of this ascending triangle that we had here, right? Flat top, ascending bottom, 5 points, gives you 93. But then you start taking out 93, and you're talking about 10 handles, which could take you to 103. And, most people would think this would be good for risk on. But what that clip is saying is that there could be a growth scare. And that means that people will gravitate towards de-risking. And you would never think that could happen after the S&P is making new highs. But, I talked to a lot of people, and the reputation of bond guys for getting turns right is much better than stock guys, okay? Because they're professional, institutional guys, and they're usually right. So if the bonds are good, there is a chance that, PEs and other things that are, inflated right now, they may have to take some air out of the balloon still with stocks. So, once everyone gave up on the 80-20 portfolios or whatever, and they don't want to have bonds in their portfolio anymore, now they look good. And most people are out of bonds and 100% equity and maybe some cash. There's not a lot of bond bulls out there.
Yeah, that's a fantastic analysis. And I think and we get it, right? It's so easy to hate bonds. Like we've heard all the arguments, and they're super compelling. But again, this is why it's really nice to look at price action and have you walk us through what you're seeing, because, these charts are sending a message too, and you've got to consider that. Dale, did you tweet out today about the VIX? Did I see you tweet out the VIX? Because I feel like if we remember back to a couple weeks ago, and that was right before we saw that quick wobble. Yeah. I know we recovered, but you were like, I don't like what I'm seeing in the VIX. The VIX is telling us something. And then we had that big down day before Trump came out. What is anything happening in the VIX that is also something for us to watch here?
Well, wow, did they crush Vol after this day? But I could say the same thing I said before that happened, is why is the VIX at 16 and not 14? This looks like another higher high if we get a turn next week. Why why aren't we making new lows with the market making new highs?
Mm.
I'm not saying the chart looks good, looks ugly, but for right now, it still is a higher low. You can't argue that. So maybe be alert for, something to happen in VIX to maybe at least retrace this decline to get started. But, look, we were down here when the S&P was, 100 handles lower. And now we're still here. Right? So,
and this is not, these are not, as you all know, predictions, but I feel like the word probability always, you're looking at the sort of probabilities and trying to assess risk and try to sort of go where the ball is moving. You never say with certainty this is going to happen. You're just being kind enough to share.
sometimes I have a lot of conviction. And
Yeah.
and people know it, but you know what it is, Maggie? It's trading is having awareness and knowing where to look under the surface, and not just trading the narrative that's on CNBC. And so you look for things like that. People weren't talking about why is the VIX elevated before that big break. So and people aren't talking about why are the bonds rallying. I don't hear a lot of commentary about that. Oh, well, the Fed's easing. And why is the Fed easing? I don't think that even though this was a good number, it was benign by 0.1%. We still have an inflation problem. But the problem that I believe Powell's worried about is, he thinks he might be behind the curve with what's happening in the job market. I don't know. All I know is momentum is not the same as it was at the last high, with the S&P's taking out this high. And this is the first, really, when you think about it, this is the first divergence since mid-September. So we've been diverging for a long time. Diverging for a long time in the semis too. So, look for a reversal day. And I would go with I'd go with a reversal day.
Jordan's asking, what does Dale think about a Santa rally? I'm hearing a lot of Elliott Wave guys saying they think late Q4 is going to be up, up, up.
Santa shows up almost every year, but I think that he's only going to have coal this Christmas for everybody. So I'm not bullish. I think there's going to be problems into January. So I'm not sure. There could be a 1 week bounce, Santa Claus rally, but I certainly don't trade on looking for a Santa Claus rally. But he's right. Most Elliotticians, and I was talking to one today while we were making new highs, and prior to today, a lot of Elliotticians thought we were going to pull back to 6,400 first. Now they're calling this a continuation move, and maybe we're on our way to 7,000 S&Ps. I think most Elliotticians, because we've taken out the high, are bullish. But my game is momentum. And if I have divergence signals, I take them. So
I'm laughing. Christopher has a great comment saying, just admit it, Dale's middle name, which he rarely reveals, is Nostradamus. That's how strongly he feels about your skill in seeing what's happening in the market.
But right now, I mean, the better shorts and metals.
Yeah,
I know it's hard to believe, but there's a lot of people trapped. I think a lot of people think, just a little correction. There's people probably buying this stuff right here. So, I think we have to hear maybe a little bearishness come into the metals market before we have a bottom. And that could be mainly a time correction. But we're talking 20% from the highs, right? 4,000, 15% in gold, 20% in silver, 20% would be $11 from the high. That's 43. So these percentages, they stack up pretty quick. It doesn't seem like much from 54 to 43, but it is. It's 20%. People would panic if they saw 20% drawdowns in the market in equities right now.
So you are suspicious that we're going to get just a reflexive buy the dip on metals now. You don't see that.
Yeah. And I think that's what may have happened today. And I'm hoping they keep buying until they get gold back up towards 42.5, because that's where I'll be looking to establish shorts.
All right, you heard it here, folks. Dale, love ending the week with you. I was so stressed out trying to get the tech end of things working before he came on. Dale said, "I'll calm you down," and I said, "Your dulcet tones."
You feel better?
I feel so much better, Dale. I do. I feel
great.
so much better. But it was very seriously always fantastic to catch up with you and end the week with you. And as usual, you gave us a lot of stuff to watch. So hope you took notes, folks, because it's important, right? Nobody wants to see drawdowns. And so if you can at least just check things, make sure you're prepared. It doesn't mean it's going to happen, but if it does, just make sure you're comfortable with it. I think that sounds like a really sound thing to do.
Don't trade your mortgage money.
Never.
Okay, it's got to be risk capital. You know how I used to see if people really meant what they were going to set an account up with? If it was risk capital, I would say, imagine striking a match and lighting up that check. And if that bothers you, it's not risk capital. You'll be an emotional trader. It won't work.
That's good advice. Make sure you're not playing with that money. Dale, any good plans for the weekend?
College football, Maggie.
Who are you rooting for? Who's your team?
I like the Sun Devils. ASU. Yeah.
All right.
Yeah.
All right.
So
one quick one. John just popped on Substack late, so I want to try to squeeze this in. Nat Gas. You looking at Nat Gas?
Oh, you know what? Good eye, John. Both crude and Nat Gas look pretty good. There was some huge gap in Nat Gas early this week. And then crude jumped on the sanctions against the Russian oil companies. With crude, I still think I'm going to have a chance. I'm going to look for a retest of that low, maybe take it out. And my eyeball is to see if Nat Gas can fill the gap. Maybe I'll try it down there.
Awesome.
But they look good.
Awesome stuff. Thanks everybody for joining us on this Friday. I hope you have a wonderful weekend, and we will see you on Monday. We got Tommy Thornton, which should be fun. He's always great to catch up with. Okay. Have yourself a wonderful weekend, and always take care and good luck out there. Somebody's got to hit the stop button because I don't have it today.